New high? Don't panic. In 2025, US stocks hit all-time high about one out of every 3 trading days. This quarter here, talking about the third quarter of 2025, and yes, that's often. The real risk isn't the high, it's our reaction to it. So in the next few minutes, what you'll learn is the real risk at new highs, the opportunities most people overlook, and a simple 3-step plan to move forward with confidence. The real risk of all these new highs that we're seeing in the US stock market and what they're not. We want to talk about and what they're not. So first, the people, they fear risk. And if it's at a high, it must fall. But new highs happen frequently in growing markets. In the third quarter of 2025, there were 23 new highs. Hi, my name is Tommy Cloud. I'm president of Third Act Retirement. It's a company that I started back in 2000, and we help people all over the country that have suddenly received a large amount of wealth. If you like today's video, and subscribe, comment, let me know more videos you'd like to do. And now back to our original content and video. That's more than 1 in 3 trading days. Highs don't predict crashes. Please remember that. We don't have any historical evidence to show that there are crashes that follow new highs. We have the opposite, actually. Second, the risk that actually matters is my behavior and your behavior. Jumping in too fast from fear of missing out or bailing out at the first dip can really hurt your long-term returns. Market timing is tough, and trying to guess the next move can erode trust and results. And then number 3, portfolio drift. When stocks run up, your mix can get too stock heavy, and that raises risk without you noticing it. We'll fix that. And then I want to move to the next part. I want to talk about overlooked opportunities. History shows that buying at new highs has led to solid average returns over the next 1 to 5 years. So if you buy now at all-time highs here in 2025, it would just be like if you bought not at all-time highs over the next 1 to 5 years. Your returns would be about the same as what history has told us. Often even slightly better than buying on random days. So over long periods, these advantages fade, and highs can lag slightly, but not much. So as we look at 10 and 20-year long-term returns, if you do buy at highs, you might be slightly behind than buying on some random day, but not much. It's still positive. The big idea, your time in the market matters more than perfect timing, and diversification still pays, and it'll always pay. You always want to have diversification. That is a basic biblical principle that, in my opinion, in my belief system, the creator of the universe spoke with us about through King Solomon, the wealthiest man, arguably, that's ever lived. $2.1 trillion in today's dollars would have been his net worth. And he said, diversify your wealth 7 or 8 ways because you do not know what's going to happen. And this is what we're going to talk about now, is a decisive playbook you can use today. Set your target mix and rebalance. Pick a target allocation that fits your goals and sleep at night level. If stocks ran ahead, trim a little and add to bonds to get back to target. That's disciplined risk control, not guessing the market. You'll also want to adjust your utility stocks, your gold, and your private investments, private credit, depending on what all you have. But you do want to have diversification and make sure you balance that out when something like this takes off. And right now, we've seen both gold and stocks take off here the past 3 years tremendously. And then number 2 is you want to automate and keep going. Use automatic monthly contribution, highs, lows, it doesn't matter. This takes emotions out and keeps you compounding. It's simple and steady progress. Discipline is a funny thing. It's so easy to say, I'm going to lose weight, or I'm going to go to the gym, or I'm going to quit smoking, or I'm going to do something. As you will find if you do a Google search, New Year's resolutions are most always broken. Discipline is a very hard and tricky thing. Keeping a habit, starting a habits are very hard. It's much easier to say and speak than it is to do. Execution is the hardest thing because human nature creeps in and we get into the procrastination or other things that go against what we want to do. We want to take the easy route. So do automate. You want to right-size your cash reserve. Number 3, if you're retired or near retirement, keep a cash cushion for near-term needs. That way you won't be forced to sell during a dip. It's a safety valve that helps you stay invested through noise. Another way to look at that is like a war chest. You have a war chest that's fixed, and it's not going to go down, and you can pull from it and give these other risk asset classes that are inflation protection as well time to grow and go up and down and do what they do, because sometimes they'll have years between break-even periods. Remember, the market's job is to test your patience. Not literally, but doesn't it seem that way? Your job is to stick to your plan. Goals-based planning, stable policy portfolios, and disciplined behavior are what win over time. And this is why all the studies have found people that work with financial advisors, that's where they get the most value, is on the behavioral coaching, not letting the folks jump out of the boat or jump off the cliff, whatever analogy you want to use. If you want a calm, customized plan for investing at highs, apply for a free sudden wealth planning session with me on the link that's in the description. We can talk together for 20 minutes. There's no cost, there's no obligation, and there's no hard sell. You can also take one of my quizzes, how much do you need for retirement? And I'll help you build a mix, your rules, and your next move so you can invest with confidence. If you like this video and you want to see more from us, go ahead and subscribe. We'd love to get more subscribers and continue to put out valuable content to you as you are aiming to be a better steward of the money that has been placed into your care. And we'll see you on the next video of Sudden Wealth Stewardship.